Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games that companies play. Get ready because today we're diving into Targa Resources Corp's latest filing, and let's just say the 5th of November was a busy day for them. Quite the financial fireworks. Before we dive in, if you love getting the real story behind the numbers and understanding what it all means, hit that subscribe button. Also, we have a really great Discord community linked in the description where we break down these filings together, so you should definitely join us there. Alright, so Targa Resources Corp is giving us a peek at their financial situation. Now, normally this kind of report comes out on a set schedule like every 3 months, but sometimes companies need to tell us something important, even if it's not on that schedule. This report is an 8K filing, which is basically a way for companies to announce major events that investors need to know about right away. The big reason Targa Resources put out this report is to share their financial results for the 3 months that ended on the 30th of September 2025. They also announced a big conference call on the 5th of November to talk all about these numbers. You can usually find these press releases and even replays of the calls on the company's website, and they've pointed us to their investor section for that. Now here is where it gets a little tricky but important. When companies talk about their performance, they sometimes use numbers that aren't completely standard. They call these non-generally accepted accounting principles or non-GAAP measures. Think of it like this: if a company is baking a cake and GAAP is the strict recipe that everyone agrees on, GAAP is like adding your own secret ingredients or leaving some steps out to make it look better. Targa uses things like adjusted EBITDA, adjusted cash flow from operations, adjusted free cash flow, and adjusted operating margin. They do provide a translation from these special numbers to the standard ones, so they are being transparent about it. But we always need to remember that these non-GAAP numbers have limitations and shouldn't be the only thing we look at. Targa Resources Corp is a company that trades on the New York Stock Exchange, and their stock symbol is TIGP. This means that everyday investors like you and me can buy and sell shares of this company. When companies report their financials, it's crucial for investors deciding whether to buy, sell, or hold their stock. The main story here is about how Targa Resources performed financially in the last quarter before this report. They are sharing the results for the period ending the 30th of September 2025. This is the heart of the report, the numbers that tell us if the company is making money, growing, or facing challenges. While the press release itself isn't pasted directly into this filing, it is furnished as an exhibit, meaning it is attached and a key part of the information they are sharing with the public. So the press release itself is exhibit 99.1, and it is where we find the actual juicy financial details. This is usually where you'll see things like revenue profit margins, how much cash they generated, and lots of other important financial figures. Because this is a current report, they are telling us about recent events, which in this case are their latest financial results. Now let's put on our investor hats and think about what this filing tells us about Targa Resources. They are reporting on their operations and financial condition. This is essential information for anyone invested in the company or considering it. It shows us the health of the business and its ability to generate profits and manage its resources. And who is signing off on this important information? It's William A. Byers, the Chief Financial Officer. When the CFO signs something like this, it signifies that the company's top financial person attests to the accuracy and completeness of the information being presented. It's a level of official confirmation. So what is the big picture here? Targa Resources is giving us their latest financial performance report. They are using some adjusted numbers, which is common in the energy sector, but we need to be mindful of those. The key takeaway is to look at that press release they furnished as Exhibit 99.1, because that is where all the detailed financial results live. Now let's talk about Targa Resources Corp themselves. They operate in the midstream energy sector, meaning they are involved in transporting and processing natural gas and other energy products. This is a vital but often less understood part of the energy industry. Their performance is heavily tied to the price of oil and gas and the volume of energy being produced. When we look at these kinds of filings, we want to see consistent growth in revenue and profits. We're also watching how much debt the company is carrying, because too much debt can be a major risk. For Targa, their ability to effectively store and transport energy products directly impacts their income. Strong demand for their services means more money in their pockets. Conversely, a slowdown in oil and gas production can hurt their business. One of the biggest risks for companies like Targa is regulatory changes and environmental concerns. Governments can enact new rules that affect how they operate or increase their costs. Also, the move towards renewable energy sources could eventually impact the demand for fossil fuels, which is what Targa primarily deals with. Looking at the date, the 5th of November 2025, this filing is reporting on the quarter that ended the 30th of September 2025. This gives us a snapshot of their performance during a specific period. When we compare this to previous quarters and the same quarter last year, We can identify trends. Are they improving? Are they staying flat? Are they declining? Consistent positive trends are a good sign, while negative trends signal potential trouble ahead. In my opinion, Targa Resources Corp appears to be navigating a complex and cyclical industry. The use of non-GAAP measures suggests they might be trying to highlight profitability metrics that look better than their core GAAP financials. This isn't necessarily bad, but it means we have to dig deeper and make sure we understand the differences. The company's strategy likely involves expanding its infrastructure and securing long-term contracts to ensure stable revenue streams. However, they are exposed to the inherent volatility of energy prices and the evolving energy landscape. A key opportunity for them would be to diversify into newer energy technologies or to focus on areas with strong, stable production growth. A notable risk is continued regulatory pressure and the potential for shifts in global energy demand. Alright, that is our breakdown of Targa Resources Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.